Good afternoon. Welcome to OptionsTender. It's Tuesday, September 2nd, 2025. I hope you had a wonderful extended weekend. Today we're going to go through SPX on the, let's bring that up to the monthly. We'll go for the monthly all the way down to the 65. And we'll just kind of show you, the 65 is, pretty much the most important part of this analysis. So we can kind of give you what's happening in the very near term. But I also want to show you and highlight the potential reversal candles that we got here on the weekly time frame. The monthly didn't do such, but we're reversing off of the danger zone anyway. This week we have ISM, JOLTS, employment numbers on Friday, and inflation. So inflation has been a risk, a market risk for some time, meaning that all eyes are on Powell for that one. And then tariffs have been an issue from the presidency and the courts now, whatever, it says they're legal or not. And for the whole entire short week, we have a plus or minus 83 point move. Clearly, we already did that today and a gap down, and we're starting to get some sort of bounce here. So I want to show you what happens next. So let's go ahead and jump through a couple of these things. We have our moving averages. If you're brand new to this channel, we are keying in on 1929, 2000, 2008, right into 22 there, and all confluence here in 2025. And so that's what we're looking to reverse off of. Are we going to get an inside month here? Was that a reversal? From the top, so far we're inside. Let's see what kind of information gives us. We have an entire month to go, so way too early to assume anything. But the 8 EMA, that's our momentum indicator, and the 20 simple moving average are both up. So momentum is up, the trend is up, but we are at resistance. Now, I've said that many of times. I'm sure I sound like a broken record, but the higher time frames don't really change very often. It's just we did get this change here, so we need to pay attention to it. And so far we have a 4 count to the upside with this new candle here. We'll see where that ends up in order to see what kind of setup we can get. No setup at this point. Here's our options tender. Okay, so the MACD, we have negative divergence. In order to see this continue to roll over and to start our bear market, we need to see that red histogram, not just a whipsaw here like we did in April, February to April, but now a true crossover. When you see the red histogram, that means that the leader line had crossed the MACD line. Okay, and we want to see this come out of that overbought territory into the out of 70. 70 is the overbought condition. We want to see that come out of there and get a little bit weaker. And we're just now getting that super early indicator of a crossover on the slow stoke. And of course, that will be the 80 line here when we have a sell signal, just like the sell signal right here. We got that right at that last candle, that first red candle. Close this up here, give us some room. Let's go to the weekly. And, we can go on SPY as well. It doesn't really matter. We have a lot less information. So here's what SPY looks like. And again, we're at that resistance right now, trying to test it again. We have this volume profile that we can take a look at from this point of view, and no real significant volume until we get down to support area down here. So the volume node is at the bottom of that range. So let's go to the weekly. Here's our DMARC. 5 count to the upside. That could change with any sort of drop below the 4 candles beforehand. So no setup there. Here's our, let me change over to this traditional look. Okay, so we have negative divergence. We haven't used this chart in a while. This divergence continues over to this high here, but we had a correction in between. So the real big question here is, are we going to get a negative divergence in the near term? So are we going to hold some levels that 20 or 50 moving average on the weekly time frame, or maybe this trend line, hold that and then make new highs with negative divergence in the near term? That's possible. And so we have to keep that in mind for our alternate scenario. But other than that, we want to see this crossover, just like on the monthly time frame where the histogram's starting to go down. We want to see that turn red. We had a negative divergence already in the RSI for weakness, so this could cycle through. And we're just now getting that crossover in 79, you see over here, for a sell signal on the weekly time frame. So we tested that weekly 8 EMA today, so that's where we're getting a little bounce off from that gap down and holding on to here. That's one clue here that I think we'll get a bounce, and clearly we're already at resistance, and we have a little bit of a gap fill that we could go to, but don't have to. This could just be a pause candle. And then you have the 20 moving average, which is our most important moving average on all the time frames. The weekly 20 is whether we're in a bull or bear market. We're clearly still in a bullish stance. 8 EMA, 20. The trend is up, momentum is up, but we're at resistance. The volume profile on this one, you can see a little bit more detail. So we're forming a node off of this consolidation area right there. If we can get through that, then we should have a rapid move to the 598 600 area. Should act as some sort of support in that near term, and then we'll continue to look at these later on. Let's go to the daily. This daily time frame, we have a three peak divergence here. The MACD. So let me start off the traditional look here. So we have this channel that is held for quite some time, and then that formed a wedge as well. That broke down. Price is back testing that point. That's also the 20 moving average that it's having trouble getting back over. I tagged it earlier today along with that trend line. So this could have another day up. Yeah, with this ascending, you could have another day up here testing and also allowing that 8 to come down to reverse off of that 8 EMA, where I think the momentum is going to start heading lower at this point. We broke down structure, and our next stop should be the 50. Not so sure that that's just going to be a bounce off of that. We could, now that we're getting a bounce now, we could just go right through that 50 and start testing lows down here in the 620 over time there. DMARC on the daily, we're starting to count to the downside now. So there's a 1 count. Let's see if we can get all the way down to 9. Okay, here's our MACD finally rolling over. Getting a little bit more of a histogram. Now we want to see that accelerate. And again, we've seen weakness in RSI after 3 peaks here. And we have our sell signal. We had our sell signal as of Friday for the daily time frame. Okay, so that's what gave us our gap down there. Okay, our McClellan summation index. I'm gonna go to I'm gonna change this over to SPY. To SPX. Okay, so here's our look on the SPX chart. Got underneath that wedge here. Back testing as we speak. Are we gonna close the gap? Maybe get a wick through there. It's possible, but don't count on it. At this point, okay? So looking at McClellan oscillator, and then we'll put on the summation as well. So you see price action getting weaker as price is going down, so they're going down together at this point. We're not oversold. We have plenty of room to the downside to head if price needs to. So let's throw on this McClellan summation that we do on a weekly basis. And looking at this one here, again, you had your negative divergence with price action, and now this is rolling over. We're still in bull territory, but this divergence we expect to play out here. You got that last divergence right there. and now we have a drop, and let's see if this starts to oscillate down. Okay, so something I highlighted on the RSI, this could be breaking down at this point, but we saw that the wedge up here was creating and consolidating a move inside of the RSI. And if we continue to break down from and don't regain that wedge, then I presume this will continue to head lower and indicate that this structure had broken down and the negative divergences are playing out. Awesome oscillator. You see that red bar? We're still in positive territory, but I suspect when we get down here that we'll stay down here for a little bit of time. Let's go over to SPY. Check out that money flow index, the accumulation distribution. All right, so like I said, these show, indicate reversals all the time. And once again, this showed that money was coming out of this market here, even though price was going up, and now it's starting to play out. And this, again, we'll watch this each and every day. So make sure you hit that notification bell, because this is going to roll over all the way into oversold territory. We're not even near there. And so I suspect we have some ways to go before we start a significant bounce at all. The Bollinger Band didn't quite hit the top there, so you didn't get that last setup, but we had plenty of other setups that led us into put positions and shorting the market. The volume shelf on the daily time frame, I have this set up a little bit different on this platform, but we're looking at the volume node that we're on right now, so that's kind of where we're getting our little bounce. And then if we start to see lower prices, we could easily set up to about 620 that I was talking about earlier. That would give us another volume node, probably some sort of bounce or at least a reaction off of there. And then nothing really until we get into this price action right here. So 620 is the only thing we have underneath us until we get to major volume, major trade in this consolidation zone. Elliott oscillator, again, starting to play out, and we want to see this get into red territory to indicate that we're correcting, and we should continue to stay red for quite some time. We're not there yet. So, nothing's impossible. Do we make a new high? I don't have any sort of wave count no structure to indicate that, but again, that doesn't mean that it can't happen. I think probability is that we go much lower. There's that look from SPY, back testing now. And as we do each and every week, we show exactly what I'm looking for. For a bull or a bear, either one, we're looking for this 23 to 32 or 38.2% retracement, and that is from the low so far. But really, this one is what we're keying in a little bit more appropriate. It doesn't change the retracements a whole lot, but if we are to be in a wave, in certain opinions, this will be a wave 4, and then you get wave 5 higher. Now, if my bullish and bearish scenario here from the lows, I'm looking for this as an expanded ending diagonal to end our bull market. And so they're all made of 3 waves into 1, 3 waves into 2, ABC into 3, ABC into 4. And now, are we done with this ABC into 5? Well, if this ends up being a larger degree A, and then we correct into a B, which would be the same as a wave 4 in a sense, for other people that are counting this. And then we have a wave 5 to really blow off the top there. That's what we'll be looking at as our alternate scenario. The GDP to market value will be astronomical if we get up to 700 here. but it's still a target. We're at that 127 from the February to April. We hit that 127 major target here, so that's what we're reversing off of right now. And then our next target is the 162% from that correction. And so that if we do get above and hold above 650, then our next target is just under 700 there. All right, and if we correct, no matter if you're a bull or bear, I think we're going to correct. You should hold around this former high here at very minimum, and then not too far underneath. Now, with my count, it doesn't really matter if you make it to the 50, 60%, it can still go higher, but that wouldn't make a whole lot of sense to me if the momentum is truly a blow off top here. But maybe we get something sharp, something really quick and sharp to go higher, but still, this will be our zone that we'll be looking for. Okay. And then after that, I think we're going to have wave 1. And then we bounce no matter what. Get a wave 2, 3, 4, 5 lower. That's what I'm looking for primarily. But after this correction here, that's the big question. Are we forming market structure to the downside with lower highs? On the daily and the weekly, we'll need to see that like this. Lower high, lower low. Okay, then let's go over and take a look at the VIX real quick. The VIX is breaking out from this larger wedge here, made a low at this minor low here in this dominant phase. Now, are we going to continue to move higher, or are we going to set some sort of higher low before heading higher here? Now, I do suspect that this goes much higher before we have any significant correction, but if we have an update tomorrow, then this should pull back a little bit more, and I think we'll be making a higher low at that point. The moving averages were above the 50, 20, and 8. We're having a hard time rejecting off of that 200 and 100 moving average. So the momentum is up, trend is up. You want to see this build its way on top of 19. That's going to be a very important level, obviously, with these moving averages coinciding with that. Why not? Let's take a look at MJ. So we're getting that pullback that we're looking for on MJ after rejecting off of this gap here. Now, I think this is possibly going into a wave 4. I think we should probably see it get into this lower degree wave 4 before continuing higher, but I do think we continue higher at this point. The momentum's up here, and the 20, that would be a perfect pullback to the 20 moving average and continue to the trend higher, maybe setting some sort of formation triangle or sending triangle, flag pattern in this wave count here. Okay, so we're looking for a setup in MJ. MSauce, and same thing, we haven't broken out yet, rejected off of the gap in this downtrend from a huge wedge, bullish falling wedge. And this could pull back just to give us a little bit more length. It looks exactly the same right in here, and then push above here, then you can have that breakout to fill the gap. And I do think eventually, once we hit higher levels, we'll have a significant pullback to start purchasing back into these shares and forming market structure. You can almost anticipate a left shoulder, head, and a right shoulder out here. Okay, that's something that we talked about with our members video. By the way, we're doing this intraday about 2:30 Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube supporter. It's 99 cents and it's very, very helpful. I really appreciate you guys. That comes along with the Discord and trade alerts. And then for $4.99 a month, you can get a little bit more in depth on each trade that we try to explain why we took it, stops, and things like that. So a lot of learning in this service, but the Discord's my favorite. Let's go to SPY on the 65 and end this. All right, first of all, the traditional look here, you have that trend line that was holding 1, 2, 3, 4 times, and now it has broken down, and we're looking to back test it. Now, how high does it go? It can ride this up for a couple hours here. I don't know if it'll close the gap, but We'll have to see what happens. It appears that off of our resistance box that we have here, that we have a 1, 2, 3. We got that bounce here today earlier, 4, and then 5 in here. So that looks pretty clear as an impulse wave to me. The big question now is, are we going to get a zigzag for a sharp correction and that's it, and we continue lower? Or are we going to get some sort of maybe A, stop at the gap here, B, and then C, maybe a flat pattern or something like that that wastes some time but allows this ascending trend line to backtest it higher. So maybe we want to close this gap. Okay, but either way, I think this will continue. We'll be looking at the other markets, of course, the tech market, and that has a backtest as well. And as we get to these higher retracements, then we'll be looking for the next wave down. And this, I think the top is in at that 127.2. Here is our current retracement. We're not even up to the 382 yet. If we close that 62%, we could wick and close this gap. Some people will consider that a gap close anyway once you get to the wick of the candle. I like the close for the gap to be filled. But nevertheless, this, I'm looking for it to be wave 1. And this into wave 2. And any type of A, B, C price action that happens in between. The corrections are very hard to play, so we're not playing this bounce. It should be, 1, 2, 3 days. It depends, because it's a short week. This can take some time away. You can get a move up, and then you can take a B triangle that could take another whole entire day, and then you can get a C wave up. Maybe it takes 3 days, and then a floater for this short week, and then next week get some follow through. So just giving you scenarios. Nobody knows what's going to happen, but it does appear in hindsight that this is a 1, 2, 3, 4, and 5 wave move. All right. And with that said, I have just anticipated a 62% retracement. And if price doesn't make it that high and continues lower, it's much more bearish. The momentum's down. And so I will adjust this accordingly. But this will be our wave 3 target. Okay. Now, it would be better if wave 3 continued through this 162 extension, and that will give us more of a probability that this is not just an ABC correction and done, and that will give us a probability that the trend has turned, according to Elliott wave analysis. And then you get wave 3 into a wave 4, and you should get a lower low into a wave 5. And guess what? That brings us right into this 620 area. And it's no coincidence. That's going to be a larger inverse head, or regular head and shoulder. If that's the case, that's what we'll see. But I think we'll probably go a little bit lower than that, and it won't be as clean. All right. So that's what we're looking at for the rest of the week coming up here, and into next week. We're looking for a lower high to set. And good luck trading, you guys. Don't forget to like and subscribe, and we'll see you in the next video.